Hi guys, good morning. This is Hector. Today is the 11th of October 2007, Thursday. 40 minutes past 8 a.m. London time. I've just sent actually my mailing list to the guys. I mean my setups to the guys on my mailing list this morning about 15 minutes ago, something like that. The London market has just opened, and I've just triggered the short entry. I'm gonna try to explain what I'm seeing in my charts. Is one of the setups that I was telling the guys about. Okay, it's on the euro against the New Zealand dollar of the 4 hours time frame, which is the chart you're seeing right now. Okay. I was telling them how price up on the last swing. Okay, this swing I'm talking about, not this one. This one was the previous one. Upon having broken, okay, the previous swing low, came back to retest it, and of course also the dynamic area of resistance. Along with the 50% Fibonacci, etc., etc. It's a very nice level of support of resistance. Okay, with different elements coming together within few pips. Also, let me zoom in a little bit. I was also telling the guys that we were seeing a number of dojis on the 4 hour time frame. Okay, have a look there. We have 1 doji, 2 dojis, 3 dojis. All right, and that when you see a doji on the setup chart or any time frame, actually, it usually means, if you zoom into the shorter time frames, a congestion area or an area of decision taking. Okay, whether it being a range or a triangle or whatever, it means basically, like I say, an area in the shorter time frames that's moving sideways or it's consolidating. Okay, so and I was telling them that I was basically waiting for a breakout to the downside. Okay, in order to trigger my short entry as soon as I find my reversal formation confirming that this level of resistance, as like I was saying, the previous swing low, dynamic area of resistance, the 50% Fibonacci level, etc., etc., is actually holding the retracement. All right. So if we zoom now into the 1 hour time frame, which is the one that you are seeing right now, let me zoom back out a little bit. Right there we are. So let me draw the reversal formation I'm seeing here. Okay, yesterday, as I was recording this video, we were only having this formation. All right, this formation. Do you remember that, guys? You can go watch yesterday's video if you want. All right. We have this this trend line. Okay, I was telling the guys that we had actually. Let me draw that properly with an actual trend line, because otherwise it's a mess. All right. I was telling the guys yesterday on the video. You can go watch yesterday's video uploaded on the blog. That we had two trend lines. All right. One was the aggressive one, and I mean the inner one. And one was the outer one. This, of course, being the outer one, and this being the inner one. All right. Therefore. What I was basically, of course, first of all, I needed a retracement, the first trend line to give way. Okay. Yesterday video I recorded when I finished my when I was actually recording the video. Current market price was around there, so we were only having this formation. All right, with the first trend line about to give way. Okay. That was that was where the chart was yesterday evening. All right, now this morning, what we are seeing, it's a clear head and shoulder formation. Okay, left shoulder, the head, the right shoulder, the neckline right there. You see the neckline there, the retracement trend line breakout. Okay. the 185 level being broken. All right, it is the level that was working firstly as resistance there, then working as support, okay, which obviously means that this is a very valid, very significant neckline for this head and shoulders formation. Let me actually zoom in a little bit for a clearer, for drawing that head and shoulder better or more clearly. Left shoulder, head, right shoulder, neckline, break out of the neckline, break out of the first trend line, and we are now just breaking the second trend line. But nonetheless, I didn't pay too much attention to the last trend line, because we had already broken the first trend line, and we had already gotten the reversal formation I was seeking for, right? So well, I basically entered short as the neckline gave way, okay? And that's basically the trade I am in right now, okay? Entry price, let me clean up the chart a little bit from so many lines, since they have already been broken, all of them, so no point drawing them. First target will be, as usual, the previous swing low. All right, the stop loss 185.45. Sorry, entry price 184.90. And my first target, like I said, is going to be the previous swing low right there, 183.70. And the second target, if we go back into the 4 hours time frame, this is going to be my final target right there at 181.50 down here. Okay, so this is entry, this is stop loss, this is first target, this is second target. Hi guys, this is Hector. One quick update to let you know that I've closed half of my position out as planned for plus 115 pips on this trade that I have open on the euro against the New Zealand dollar of the 4 hours time frame, which is actually good, because now I can safely move my stop to break even. And well, it's very nicely timed, because well, it's 10 minutes past 5 p.m. London time, and at this time I usually finish my trading shift. So you know, it's always nice to be able to step out of the trading desk knowing that you know you've pocketed some profits for the day, and that your stop loss on the second half of the trade is safely moved to break even. All right, guys, I'll keep you updated on whatever happens on the second half of the trade. Okay, bye bye. Hi guys, this is Hector. It's Monday, 40 minutes past 8 a.m. London time. If you remember, last Thursday I triggered a short entry on the euro against the New Zealand dollar of the 4 hours time frame. Price Friday went all the way down to 182.50, but it seems like it's retracing back up hard on the first half of well, as the markets have opened for today, Monday. And I don't want to give all these pips. They are, well, 250 pips on the table, and I don't want to give them all back to the market on a possible retrace, as we are seeing some retrace now there. So I trailed my stop down here from below this double bottom, which has been stopped out right there about 15 minutes ago. I still believe in this downtrend. Okay, I still believe that we may get, you know, this retracement might be over soon and then continue to the downside. But like I say, 120. I've made 120 pips on the second half of the trade. I made 115, by the way, on the first half of the trade. Like I say, 120 pips is just too much. You know, too many pips to give them back to the market. Okay, so that's why I decided to trail my stop down. Like I say, right above this double bottom there at 183.50. All right, guys, that's all. Remember, this trade was taken last week, but I couldn't upload it on the blog because, well, it wasn't. It hasn't been closed out until, like I say, barely 20 minutes ago. All right. Okay, folks, that's all. Bye bye.